Welcome back, everyone, to another Market Conversations. Boy, January 8th, 2021, here we are. Thank you all for those of you that have tuned in. I saw Apex Crypto was in the chat before the show even went live, and we've got Michael John Scott and Pete Kelly. Hey, Pete Kelly. Hey, guys. So I'm going to put out a question to y'all. Maybe Brady, if you'd be so kind as to make this banner for me, and we'll put it up on the screen and just have it sit there as I go through the beginning here. And that is this question. How many of you are either invested or invested and continue to invest in other assets outside of the digital asset space? So whether it be stocks, bonds, gold, real estate, etc. I would really be curious. I want to talk tonight about energy. You're like, Jerry, we didn't want to tune into a utilities channel and talk about our PG&E bill tonight. No, that is not what I'm talking about. I'm talking about putting on a set of lenses and looking at all monetary activity as energy. Now, obviously, this is nothing I came up with by myself. The last quarter of 2021, I did a deep dive into Michael Saylor, the CEO and founder of MicroStrategies. Very interesting man. And coincidentally, over the last quarter, he spent quite a bit of time on various YouTube channels and podcasts talking about the kind of the, historic entry of a publicly traded company into Bitcoin as a treasury reserve asset. Very fascinating stuff. But what I find really interesting is that Michael talks a lot about the view that he's coming from as he sees it as it pertains to money. The what is money question, right? Some of us, when you try to explain this to people, it can get kind of lengthy because it's not a simple answer. So throw those answers up there. Jerry, we don't want to talk about energy tonight. Well, Simon, unfortunately, it's kind of the topic du jour. And I think it really has some value in this. So I've been looking at energy for a long time, right? I've been calling it money. And it's been really the last 3 years that have been deep dived into this crypto space, which has forced me to educate myself around investments, monetary policy, various asset classes, and just like I'm sure you folks. Let me say hello to Steve. Hey, Steve, and DadFit, good to have you, man. Nice to have you. Yeah, I'll throw out a vet price prediction. More. It's going to increase. Good, solid project. I have it in my portfolio. As far as price predictions go, people that give price predictions, they're kind of catering to a bias, and I'm not going to do that. I will tell you that I think there's a tremendous amount of value ahead for VET. They continue to make progress in China and elsewhere. What they're doing with immutable medical records is making a statement for an entire vertical that nobody in crypto is made any ground in. That's a big business. The medical industry is a big business. But anyway, let me keep going with my rant here. So, I've done a lot of reflecting over the last week and a half, 2 weeks. Many of you know my first 2.5 years in crypto were spent where the value of my portfolio was less than half of the actual US dollars that I put into it. And it was tough. That 2.5 year bear market was tough for me. Coming in at the very beginning of 2018, as we were sliding off the back of that incredible December 2017 bull run, obviously skewed all of my average cost per token to the high side as I continued to buy on its way down. We all come at this space at different points in time. Case in point, I have a friend came in a year ago, in the absolute heart of the just bear market, and was able to gobble up a nice couple of bags of different projects, quote unquote, on the cheap, and kept it, his average cost per token was really low. And right now he's doing very, very well and extremely giddy. And we're all going to have various stages of that exact thing. But I want to get back to what I'm talking about with energy. So when I first came to crypto, and it was like, okay, if I'm truly going to understand what these DLT projects are really doing, what is the real value proposition they bring to the table, I need to understand monetary policy. I'm going to need to understand currency creation, which led me, I'm going to have to understand banking. I'm going to have to understand international banking versus national banking. I'm going to need to understand supply chain. I'm going to need to understand payment systems. It's a heck of a learning curve. And a lot of it continues to go back to this basic premise of what is money. I'm going to pause here just for a second and read this. Been in crypto since 2013. When you ride the highs and lows, it helps give you perspective on your long-term goals. Well, you know what, Apex, I would agree. I would definitely agree with that. We get seasoned the longer we stay here and the longer we stay tuned in, right? Between our experience, our environments, for those of you that have chose to tune into the show tonight, it's a classic example where you've distinguished yourself from the person that's sitting home watching CBS Blue Bloods or something, right? You're tuned into something that is hopefully going to add a little bit of perspective and insight so that you're a better investor tomorrow. And that's really the name of the game. So as I was coming into this space and realizing what I thought I knew about money was very superficial, I found some things that I pass on, and I'm going to bring them up. First and foremost, an absolute excellent source of basic level understanding is the Mike Maloney Hidden Secrets of Money. It is an absolute, it's like the very first thing I refer people to after a conversation if it appears that they're coming into this space like I did, with a very kind of limited understanding of how this game works. It walks you through 8 different episodes, about 45 minutes to an hour long each one. And you get both through his words and visualizations, as well as clips from interviews, a really decent understanding of that system out there, that game that we've all decided to play, right? Also, I had the good fortune of meeting some folks in this community. I'll like to give a shout out to Cryptopolis, because when I started getting that fever for learning, right, it was pretty early on, and I'm tuning into various YouTube channels, and I'm watching crypto YouTubers, and I'm watching George Gammon, and I found Real Vision, and it was like this whole world opened up for me. And one of the things that I would do, and I'll pass this tip on to you guys, is that I have the habit of always having a notepad now. I always have a notepad right by me with a pen. And when I'm watching something and something pops up that I'm not clear about, whether it be a term, some phrase that the entities on the screen seem to fully understand the meaning of, but I don't, I'll write that sucker down. I'll pause the video. I'll go to Google, and generally between Investopedia and Google searches, I'm able to get a decent idea of what that term means or what that phraseology is, and then come back and rewind the tape a little bit, play it again, add in my new understanding to the term, and the picture continues to solidify for me. That was a great little tip. I'm going to take a break real quick. I want to acknowledge some folks I've seen popped into the stream. Steve, good to have you. MS, nice to see you back. Scorpion, hey, nice to see you. I also saw Polka Dot. Now, special shout out to Polka Dot. And here's the deal. I entered my first position into DOT today. I hadn't ever owned DOT before. And it bounced down from 10 something down to 9 even. I pulled the trigger. I did it on Kraken, which was an exchange that I was very unfamiliar with. I'd never executed anything on Kraken before. But I bought my DOT on Kraken, and I'm staking it on Kraken for 12%. Now, they've got this cool little staking wallet that'll show you your progress, and it equates it into a value, and the value is in the form of Ether, right? Denominated in Ether, which is always a little weird. Anytime you start denominating something in something other than US dollars, the old guy here, right? The old dog, new tricks type of deal. It's like, oh man, I've got to now, do some extra math. But don't let me get off on that being old rant. There's no excuse to not learn, right? So you hunker in and you figure it out and you push through it. So, Tony, nice to see you, man. Glad to have you here tonight. So, where was I? Oh, Hidden Secrets of Money. Okay, so with that, I go off and I'm like working with different people. I remember I met Jungle Inc. and he had me on a show, and then the very next Friday night he called me back. He said, "Hey, you want to do it again?" And I started liking interacting on video. So hence, fast forward, I get and meet the dudes from OTC, right, on the chain, Jeff and Chip, and talked to them. I did did a few things with them. I was on their roundtable once or twice, and through conversations with them, they put me on their channel, and I started producing content for their channel there, and it was a wonderful experience. Very grateful that they spent time and showed me how to create a video and make a thumbnail and do this and do that, and then as I kind of wanted to get away and do some other stuff, I created this channel, right? And started this, and here we are today. And what I'm looking back and I'm remembering this Beyond Moon series I started with Cryptopolis, and I wanted it to be something where folks could tune in and get good, solid information and perspective, not only from myself, but from a guy like Cryptopolis, 45 years investing. He's got a little experience, brings a perspective that a newer person like myself wouldn't have. And I remember we had gotten to this particular point in the series. It was episode number 3. So our episode number 1 was talking about sudden wealth syndrome, because a bunch of us that are new to investing are coming into a space, especially in such an early, young time, that we're way, way, way early on this adoption curve, right? And there is a very, 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 very solid chance that all of us at this stage in the adoption curve are going to experience exponential growth. We're going to experience parabolic movements in the market as more and more of the world gets tuned into the value propositions that are available in cryptocurrencies. Okay, so we get going and we're talking about sudden wealth and we're talking about golds, and we get to episode 3 and I do my quote unquote exit strategy, which I was very proud of at the time. I put a tremendous amount of research and time and energy into crafting what I thought was the best way for me to maximize the value that my portfolio would create. In short, for those of you that haven't seen episode 3 in the Beyond Moon Crypto Wealth series, it's an hour that I'll distill down for you in half a paragraph. The idea was that my assets in my crypto portfolio would grow to various levels, and I would scoop those assets, sell them, and use fiat dollars to get other assets in other markets working. All assets that I would put my cash capital into would be assets that generate something, whether it be interest or a dividend, as well as have an underlying capital appreciation element. And I had worked out all the numbers, and I had done my physical research down here in Costa Rica. I found some incredible, what they call confianzas. They're like credit unions, and they do a lot of financing. And they also, by the way, have really good rates on saving. And I found a couple, one of which I really liked, that would have paid me, or will pay me, and they still will if I decide to do that, 10% a year, which for like a certificate of deposit to pay you 10% a year in the United States is unheard of. So I thought I was really onto something, and I had done all my math to figure out how much capital that I would need getting 10% that I could have a monthly distribution in the form of X thousands of dollars. And I think I was figuring $10,000. I wanted $10,000 a month as an income. I'd have to pay taxes on that. So I'd probably net, somewhere around $7,200 a month. And on $7,200 a month, I could live like a Greek god. And with that kind of money, I might get a personal trainer and have the body of a Greek god in a year or 2 or 3 or 5, depending upon how far I let myself go from here. So anyway, the point was I had worked this whole thing out, and I thought I had it nailed, right? I had various distribution points. I had the tax covered. I had the tax angles covered to maximize that system. And I've stayed in, right? I'm still here, and I'm still learning. And one of the things I learned, and I'll share with you all, the value of having an open mind. As new information comes in, I'm willing to change my mind, right? I have extremely strong opinions, but I hold them loosely. I am willing to, with new information, change my mind. And something I've stumbled onto, it's kind of one of those secrets that's just been out in plain sight forever. And it's called collateralization. The wealthy have been amassing assets. They're always amassing assets, but they don't sell their assets. They borrow against them with very favorable rates. And with that capital, they live, they enjoy life, and they acquire more assets. And it's this constant cycle of acquiring more assets, allowing the system to have those assets appreciate, as well as they invest in assets that pay them to hold them. And I'm thinking to myself, okay, that's what we want to do, right? It's one of those things that we never get taught. If we're lucky, somebody shares us the secret, the little trick of compounding interest, and we dig into that and we learn how to do that. And that's wonderful. And it's a very, very valuable tool to have in the toolbox, understanding compounding interest. But it's not the end all be all for wealth creation. Truth of the matter is, wealth creation is a simple process of acquiring assets that not only appreciate, but pay you to hold them. And the deal is, you don't let go of them. If they're good ones, you don't let go of them. If they're good ones today and you find yourself in 3 years, they're not good ones, you sell them. and acquire a good one. You understand the process. So that's something I'm looking forward to bringing you folks. I have been in the background working out this kind of complicated math spreadsheet so that I could visually easily show and demonstrate various methods in which I can collateralize the rest of my life and stay in a process of being paid to own the asset, borrowing collateralized loans at favorable rates, and having my portfolio be so large that it continues to grow and generate all of the capital required to pay back the loans that I'm taking. It's a very interesting process. Look for more of that from this channel going forward. But now it's time to dive in to the energy topic. All right, I just quickly got to say hey to Vet Bro, Mizzo, Tiffany, good to have you, Tiffany, Bill Gould. Bill may very well be the very first supporter of this channel. I remember Brady and I, when we first started doing this live stream, Bill was there. You know what I mean? Bill was like, Jerry, right on, man. Hey, what's going on? I want to ask you folks, if you're willing and you want to help support this channel, there's a couple of ways to do that. One, if you're new, subscribe, hit the notification bell. But if you've been here a while and you're getting value from this channel, share it with your friends on Facebook, Instagram, Twitter. You never know. If you're getting value from it, maybe somebody else will also. With that being said, let's get into this energy concept. So one of the things that I've been really putting a tremendous amount of time and energy into is understanding how the system that we all live in, and when I say system, you can say economy, right? This economy that we live in, when you really open up the hood and look underneath it, right? Look at the guts, the engine, the wires, and all the different parts and stuff on, it's really a scary, ugly thing. It really is. What I'm coming to realize is that there is not an asset class other than cryptocurrencies that isn't bleeding us dry. When I say bleeding us dry, I want you to picture this. You as a human being are creating energy all the time, right? You're creating it in the form of emotions and activities and all this, that, and the other thing. But there's a part of the energy of your life that is being directly converted into monetary energy, right? Monetary energy. Pardon me one moment, folks. And it's that monetary energy that I've been focusing on. And so for many of us, you know, whether it's through some entrepreneurial endeavor, whether it's you're a salaried employee or a wage earner, you're out there expending your energy, and in return, you get currency, right? This value. Well, I've always heard about inflation, and I thought I understood what inflation was. I kind of always put inflation in one category, right? I always put it in the category of the cost of stuff going up. Fair enough. And that's actually at its core, right? Its simplest explanation. That's exactly what it is as it pertains to the economy. However, there's a lot of different kinds of inflation, and it's in many different places. Hi, Lori. You're right. Better late than never. That is a great investment slogan. Get off zero, right? Get in the game. Whether you're getting into crypto and tuning into this channel tonight, or you've been with us for the last X amount of years, it's never too late to start. So anyway, back to the energy thing. So many people are out there, all of us, man, we're expending energy, for many different reasons, but a large part of the energy that we expend is to receive monetary energy back, right? Money. Well, when I look at the world of money and I break it down into classes like currency, that's an asset class. Real estate, stocks, bonds, commodities, gold being a commodity. And I start looking at these and I start looking at, okay, well, since we went on the gold standard, there's been this very slow march of inflation. And then we get into the Paul Volcker era and rates went way high and inflation went way down. Deflation happened, right? Because the rates went down, made it harder to borrow money, therefore made it harder to expand. However, we always kind of, as a country and around the world, had, because of the population expansion, had this increase in productivity that they measure and call gross domestic product. So with gross domestic product increasing year over year at approximately anywhere from 2 to 3% clip around the world, some a little more, some a little less, depending upon what pocket and how much stuff was going on in that particular region at that particular time. But as a global mean, it's about anywhere from 2 to 3% a year. And that was cooking right along, right as I was going through my teenage years in the 70s and in the 80s, finishing high school in the early 80s and going off into the workforce, but also going to college and doing kind of things and shaping my worldview. And all the meanwhile, kind of oblivious to what was really going on. Well, with the advent of this ever increasing, we'll call it monetary supply, and monetary policy directed at currency creation to solve problems, what that does is it creates several dynamics, right? And we're all fighting these forces all the time. None of us are outside of the economy. We're all in the economy. We're all players in that game, some willing, some unwilling, but we all are there. So I'm looking at this thing and I'm thinking to myself, okay, if I just go back to my own life and start reflecting on these things, and I think, okay, well, I knew real estate went up on a yearly basis. Most kind of the national average was 3% a year. I thought that was a good thing, right? I did. I thought it was a good thing because that meant the value, the dollar value of the house went up. Well, what I didn't know and what I've learned, and I want to share with you now, is that yes, there's a perspective that if your house is going up, that's a good thing. But if the reality is your house is going up 3% a year, but they're creating 5% a year more money, the purchasing power of the dollar is going down, you're not actually gaining ground. You're losing ground. So what that brings me to is understanding this concept. It's called the hurdle rate. The hurdle rate is the increase in productivity or value that I can create minus the inflation rates or costs, right? The or devaluation of the dollar. Hurdle rate is the break-even point. Case in point, here's the quick math on it. Okay, if I buy a piece of property and this is my home and I'm going to live in it, it's one thing because your home is important. It's important to have a home. It's not so much an investment, but it's your home. Okay, great. If I buy a rental property for the sole purpose of generating me an income or producing revenue, if the house is going up 5, 6, 8% a year, but the taxes are going up and the currency that I'm being paid, the rent is being paid to me, is also inflating. In other words, the purchasing power is going down. I have to factor in the percentage loss of value in the currency, which is purchasing power. I have to factor in the increase in what it will cost me in the form of dollars for maintenance, tax. And after I get done with that mathematical equation, I need to have the rents increase beyond the bleed cost, what that energy that's being sucked out of the system through monetary policy. And every nation has it. There's nobody who's got a sound monetary policy. There's no government on the planet with a sound monetary policy. We'll just put that out there. So anyway, back to this deal. So I start looking at these numbers and I'm thinking to myself, man, this is scary. This is really scary. Okay, what I thought my whole life of real estate being this really good investment really isn't a good investment. Oh man, where do you go? Well, forever, years and years and years. My grandmother used to swear up and down. My grandmother called me Jay. Jay, you should take that money and put it in bonds. You should buy some bonds. Now, keep in mind, my grandmother lived through a world where she actually made money on her bonds. If she bought a bond for $100 and it was a 5-year bond or 10-year bond, she would get her little coupon every month. And when the bond was ready to mature, she'd get her $100 back. Well, she was making 15, sometimes 16, 17% on bonds, depending upon the duration. She had a great retirement life based on bond investing. Well, rates are so low now, you can't make any money on bonds. It's really scary. And as a matter of fact, here's a case in point. I got this from Michael Saylor. This is an example. 10 years ago, if you wanted to, let's say, get a $50,000 a year income from bonds, you would have need to put in $1 million. So here's my $1 million, and the coupons from the bonds will give me a $50,000 a year income for 30 years. Okay, great. Fast forward 10 years, to get that same $50,000 a year income, it takes $10 million. That's inflation. That's one form of inflation. It's because the monetary supply, the M2 monetary supply, is increasing. This energy from our monetary system is being bled out. Where's it going? Right? Where does it go? It doesn't turn into vapor and go into the stratosphere. No. It's being taken from us and being put into the wallets of the fat cats. And the truth of the matter is the fat cats don't hold currency. They'll get the currency and immediately turn the currency into an asset that is going to appreciate faster than the debasement rate of the currency. And for a long, long time, it was bonds until monetary policy forced bonds to come down so that they could create credit cheaply. Credit for many, many, many years meant the ability to grow and expand. You could take a loan. You could buy new equipment. You could hire new people. And all these things were supposed to equate to more productivity. More productivity, more revenue, more value, more cash flow. That whole model has been destroyed. And it's been destroyed because of super cheap credit. But I hope you got the point that I wanted to make with bonds. They're not the same thing as they were 20 years ago. It's a really scary deal. Okay, let's move to something that we see every single day. Let's talk about stocks. Well, you've got companies earning in dollars, revenues, cash flows are denominated in dollars. We know that since the financial crisis, our currency creation supply has been 5% a year. So you got to add that. You got to beat 5% a year. And they figured out a method in which, by borrowing cheap money, taking that debt that you have and buying your stock back, creating more earnings per share, that keeps your valuation up, and you're able to beat the monetary expansion rate, quote unquote, the hurdle rate. That was a neat little trick they learned 10 plus 12, 13 years ago. And it got pervasive, and it's everywhere in corporate mentalities now. I mean, it's just become the way business is done, not by increasing productivity, but by increasing, quote unquote, a spreadsheet valuation. Those are two totally different things. Productivity is different than what numbers are on a spreadsheet. But anyway, I digressed. I don't want to get into that too much. But anyway, so stocks have been on that ride. Now we look at the companies that have done really well over the last blank, right? Your Facebooks, your Amazons, your Googles, Tesla's really come on strong. A lot of that, I think, is for a lot of different reasons, but I just want to, for a second, give you the rundown on the Amazon, Apple, Google type of deal. And that is this. Those are companies that figured out leveraging the network effect and being able to produce a product to us with little to no cost. In other words, when a developer creates software, they do it one time with some bug maintenance fixing along the way, but the variable cost after the creation is literally nothing. They're able to push us products for literally nothing and monetize it through advertising. They get rich, we get stuff. Okay, great. But even they have an issue, and that is that the currency that they're making is losing ground, because our GDP, our growth, is on average 2% a year, yet for the last 10 years prior to COVID, the currency supply has been increasing by 5% a year. Fast forward to COVID. Boy, did that shake some stuff up. Well, they are going to print money like drunken sailors. We know it. There's no escaping it. They've painted themselves into the corner. I'm talking about countries now. Between deficit spending and their economies collapsing at record levels, they've had to crank up currency creation. We're looking at, and all the estimates say this, I'm not making up a number out of thin air. Anywhere in the US, 15%. Other countries, 15 to 20, 22% per year. Now go back and think about, okay, if you're going to gain ground on the debasement of the currency, you have to increase your productivity or your earnings by 15 to 20% just to stay even. Just to stay even. Well, where for years and years and years has everybody gone to in times like this, right? It's no secret. We've all heard it. When inflation's really high and things are kind of, sketchy, turn to gold. Gold's this wonderful lump of metal that's been valuable for 5,000 years. All right, let's take a look at gold. The gold's valued in the dollar. Therefore, it's a fiat-based system. Gold's got to be 15% a year, right? It's got to appreciate in value 15% a year. Oh, wait a second, Jerry. What about the bleed? Gold's got to have some backdoor escape of energy. Oh, you're right, it does. It has its own little mechanism for increasing its supply. Just like they're cranking out more money, don't think for 1 second those gold miners, silver miners, palladium miners, etc., aren't working their little tookuses off to produce more gold. Gold has an average inflation rate of 2 to 3% a year. It's bleeding off money. Well, here this little thing comes, cryptocurrencies and Bitcoins. And what is very interesting about this is that it's the first time in the history of man that we have a monetary system that doesn't have a bleed rate. If I put $100 of energy into Bitcoin today, there's nothing within the network or the system that's going to degrade that value. Yes, it cost a lot of money to secure the network, but I'm not a miner. I'm a participant in the network. Do I have a social conscience? Yes. Would I like mining to require less energy and be more environmentally friendly? Yes, I would like all that stuff. But does it do anything? Does it change the fact that once I put my money in the network and I leave it there and I don't touch it, that there's nothing bleeding off of it? No energy loss. And it's a really fascinating concept. And we're all starting to truly see what a fixed, truly scarce, fixed supply asset looks like when demand exceeds supply. For years and years and years, everything we've ever been able to invest in, real estate, there's always new parcels being opened up and developed. All right, so that's not scarce. Even though they'll tell you you can't make more land, well, guess what? You can always make more land developable. You can always develop more land, okay? Well, bonds. Well, guess what? They're printing bonds like drunken sailors to cover all this deficit spending and money creation. Bloated market. Well, what about the stocks? Guess what? When a corporation needs to raise money, they will create more stocks. How many of you ever bought stock in something, saw the company was really doing well, but the price goes down, and you look at the circulating supply of the stock and they've increased it by X amount of millions of shares? We know fiat currency, they're going to print more, so that's not like a scarce thing. What's left? Gold. Oh, we talked about that. The miners will make and put everything they can into creating more, especially they higher the price. The more valuable gold gets on the market, the more those little guys are out there, those miners, they get really ingenious and they employ new techniques and new technologies and they mine more gold. Well, that's not possible in most all of these digital assets that we've decided to put our monetary energy into. It's really an exciting time to be an investor because we are actually getting to experience something that none of our ancestors ever did. I'm really personally looking forward to see where this is going to go. And I know if you're tuning into this channel, you are also. Well, I'm looking down and it appears to me that our lady on the street, Bidda Avenue, is in the house. Hey, Brady, if I've missed any questions, please throw them up. And if I've missed saying hello to anybody, I just seen the Casino Coin Bro is in the house. Hey, Casino. I'm going to take a quick, I'm going to bring in Bitta. Hang on, click. Okay, let me go through this real quick. Hi, Bitta. Say hi to everybody, Bitta.
Happy Friday, everybody.
I think I acknowledged Tiffany already. Thanks. Okay, so it looks like everybody that I should have said hello to, I did. And Bitta, you are not at home with the kid. You are truly our lady on the street because you're in your car. How many people have you talked to about Bitcoin today?
Oh my God, that's literally what all we talked about today. So it's been exciting. I've been posting pictures, my screenshots on my page because I've been posting it since it was under 8,000 and nobody listened. So it was a very interesting conversation we've been having lately. So hi, Tony. So it's been a very interesting day. So when I first started talking about Bitcoin, which was, I think it was like around $5,000-6,000, long time ago, in my book, anyways. I was telling one of my coworkers about it, and he always made fun of me and said, "Hey, we're gonna get Beanie Babies. We're gonna bring Beanie Babies back." And once it passed 15,000, he wanted to know how to buy it, and I was like, "Say I told you so first." And then it's been interesting.
Well, I'll tell you, you want to hear something interesting for me. So obviously, none of us can truly escape our trainings, our past, philosophies that we've held for a long, long time. And I kept, but this most recent kind of run that we've had lately, I kept kind of butting my head up against, as we were hitting these all-time highs with Bitcoin, I was like, maybe I should just amass some cash and wait for a correction. Because my experience in this space the last 2.5 years before this most recent acceleration was assets would go up and then they'd go down. They'd go up and they'd go down. And we were doing all this stuff. And I started really thinking to myself, the longer I hold cash, and I'm learning about monetary energy and these different, all the different ways that everything else in the world is bleeding our energy from us, right? Whether it's the tax man, whether it's monetary policy, whether it's, corporate strategies that, it's just dun. And I started thinking to myself, we've never before in the history of investing had truly fixed supply scarce assets that is getting a larger and larger group of people being interested in and in participating in ever in the history of man. We've had other networks, right? We've had other networks and we've seen what happens to them. We watched what happened with cellular communication. We watched what happened with the internet. These are all networks that grew, and as they grew, their value grew, and the companies that were involved with them grew. But again, all those things, none of them had fixed supply. None of them, matter of fact, it was the opposite. The more participants in the network, the more they could supply.
Yeah, it's a different world. It's definitely a different world.
The crypto thing is a different world. And it's going to require us to have different strategies, So the thing I've been struggling with is the original idea. As you said, I was also thinking, okay, when it gets to this point that I am going to, get out and realize my gains. Like originally, that's what I was planning. But now seeing how things are going, we're thinking about, hey, we're going to actually keep it and try to collateral. I can't even say the word. Collateralize.
There we go. And then get interest on it or stake it or whatever it is that we're doing. But then it also has, I also have in the back of my head, like, okay, so if Bitcoin, let's say, goes to like 70, 80,000 and then you don't realize your gain and it comes back to 30,000, is that a smart move? So that's what I've been struggling with and thinking about is like, when is it okay to cash out, or is it never okay to cash out? And then if we don't cash out, and the same, I don't think it would happen for Bitcoin, but for other assets, if we don't take our gains, are we gonna regret not doing it because it's gonna come down to that point? So that's what I've been struggling with.
Well, I'll tell you, I would say I don't think you need to struggle, and I'll tell you why. Every single one of us is different, and there is no one strategy that we can all adopt and it'll be the right strategy for us, right? So
Right.
The thing to do is to understand what your goals are, right? What your risk tolerance is, what you can risk, what you can't risk, and then formulate your strategy of investment to maximize all of the elements of the world and the economy around you so that you get the most efficient strategy for BITA. And that could be different than the same for Jerry, right? We're both going to build the most efficient, beneficial strategies for our situations. And they can be completely different, but in one respect, they're completely the same because it's the best for you and mine is the best for me. And that's the beauty of this community that we're in, right?
Right. The thing is, from having talked to you for a while now, I'm learning the right questions to ask. You have a certain way of asking questions that are just really well put together because your scope of knowledge is pretty broad. And so that's what I'm learning, is asking the right questions, because that's the struggle, right? Knowing what questions to even ask. And I've learned quite a lot from, talking to you and meeting your guests and things like that. And I'm trying to formulate the plan that will work for me. And I've kind of put aside a little bit of the different bags that I said, at this point, you might be okay to take this out because it's my short term. So I'm formulating things for myself. Mm-hmm. So even if it doesn't work out, I don't think I'll regret it because it will get me ready for the next time. So it's nice that I'm even able to participate in this market right now. So you can only, learn and grow from it. So I'm excited about that. So it's been amazing.
I'm excited for you. I'm excited for you. I'm excited for all of us. There is Jan V1. Hey, welcome to the show. I don't think I've seen you here before. Should you buy ADA? That's the only person that can answer that question is you. I will tell you, I'm a firm believer in the Cardano project, their roadmap, the technology. I personally am an investor and hold a nice chunk of Cardano. But should you buy it? I don't know you. I don't know your circumstances. I don't know anything about you. I'm willing to learn. It takes me to my next topic. I think that was almost a perfect segue. BITA, I have not talked to you about this yet. This is breaking news right here on this show. You've never heard me talk about this, but I'm going to tell you. And I want your feedback, and I really like the feedback of the audience. Hey, Phil, good to have you, man.
Hi.
Yeah. I'm excited about Flare. I'm excited about Flare. But I'm not going to develop biases that lock me into something. Anyway, BITA, check this out. I've decided that I'm going to take my distribution of what I've learned and my attitude of being part of something. I don't want to be a pusher of information. I want to interact with people, exchanging information and growing. I'm going to build an investment club. Ooh. And I'm going to build that investment club on Patreon, and I'm going to be building it with Noah Seidman.
Oh, how exciting!
Because what I do my context and my approach versus what he does, fundamentally, we're like on the same foundation, but he, you know, he's very technical. He's a very technical guy, and I'm not a technical guy. I mean, I'm technical when it comes to math. You know what I mean? I'm very technical when it comes to math and understanding the rules and this, that, and the other thing. Channing, good to have you here. But I wanted to ask you folks, the audience. Well, I'll put it out there. Would a Patreon subscription that gave you access to bi-weekly club meetings, video conference, as well as one-on-one portfolio and interaction, like talking investment strategies, looking at your particular stuff, would that be of value to you? And would it be something that you would want? I guess you would call this, I'm doing a focus group right now. I guess that's what this is right here. We're doing a live YouTube focus group. Would private access as well as a closed group, not open to the public, where ideas are exchanged, maybe we even do a 24-hour a day private Telegram group that matches the Patreon group, so only subscribers to the Patreon group have access to that group, and it's something that can be interactive all the time. Randy, good to have you. Nice to see you here, young man. So that is something that I'm working on. I'm always looking now at what's stuff that bleeds, right? Stuff that takes my energy and disperses it or dissipates it somewhere else. So I'm looking at Patreon, right? And I'm thinking Patreon is just code. That's all it is some software code. Cost the guys some money when they made it, right, for their time. But once they made it, they put it on a platform. There's a little bit of operating cost to keep the electricity and all that stuff going. But after that, it doesn't take a lot of money to keep that damn thing running. They're not cheap. They're not cheap. I wish there was a blockchain version of a Patreon group.
Maybe you can develop one.
You know what? If I had any technical ability whatsoever.
Noah does.
Yeah, I don't know if he's a coder. He's great with technical analysis and using the tools, but thank you, Channing. And I think Casino Bro talked about tiers. I'm not totally sure yet. This is a concept. I know I want to do it. I'm going to build it. Yes, I'll do some tiers, but I don't want it to be too crazy. And I don't see myself like adding a merch element to it because I don't want to. Here's the thing. I don't want to create a group that's just about. I want to monetize my information and what I have to offer. That I do want to do, and I don't think there's anything wrong with that. But I also don't want to. I keep coming up with the word victimize patrons. I want to be able to really bring them value.
You know what? The thing is, I think that's a wonderful idea because once you start something like rolling, you don't know what it's gonna end up doing. And I think it's a valuable thing that you would do that. And for something that has that much value, I don't think anybody will feel victimized because I've been fortunate enough to be able to reach out to you and ask my questions on 101 and be able to contact Noah and Brady and all the other people that I'm able to get information that I need. And I mean, for somebody that understands the value, I think that I don't see anything wrong with it because you are putting your time in it, your energy in it. And even if you have merchandise and things like that, I think it's something that can and should be supported and not feel like, I mean, you're putting your time into it. So like, it should be that way. Like, I don't see any objection to that, because it's not like you're offering something that they can get for free somewhere else. Like, it's a special, you have a lot of broad knowledge that has been really valuable. Even to me, like the things that you suggest to me have been very valuable to me. So I wouldn't mind subscribing
Hi,
to something like that.
Princess.
Do you hear her?
Hi, Princess. Your mommy's
So,
going
no,
to
that would
be
be
rich. Mommy's going to be really wealthy someday.
one day.
Don't ask for the keys to the car, because you're going to have to learn to go out and make your own money, put your own money to work, and buy your own car.
Yeah, no, it's no, I think it's an amazing idea. I really like that. So that'd be great.
You're going to join?
Absolutely.
Oh, that a girl. I love it. Okay. Joshua, good to have you. Nice to see you here. Shout out to Cardano for sure. I want to just take a couple of minutes and finish on what I see going on in the markets right now. There is this incredible momentum, right? So we've got this very public new group of entrants into the digital asset space over the last 3 months, right? Where Square in their whole Cash App thing, they're increasing users on a daily basis, and it's really great. You've got a lot of these Fold, like companies called Fold App, etc. They're expanding their user base. You've got PayPal bringing in a one-click, right? With one click, a human being can have exposure to the appreciation of several crypto assets. One click. That's huge. That takes so much friction for any new person coming into the space to be able to get involved with the capital appreciation of this incredible fixed supply, almost perfect monetary policy, monetary system on the internet. I mean, it's really kind of cool. Then you have a tremendous amount of the old guard. When I say old guard, I'm talking about the Wall Street fat cats, the hedge fund billionaires, blah, 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 bringing their resources to the table, right? You've got your companies like MicroStrategy, just full court press into Bitcoin as a corporate treasury asset. You've got, these trusted billionaire money makers who have been making money for their clients for 20, 30 years. Your Paul Tudor Jones and Stanley Druckenmillers, and you've got, media outlets talking about crypto all the time. And you've got some of the best and brightest discussing this in private platforms like Real Vision. And it's just the sentiment and momentum and the money that's coming. We're seeing that, but we're just in the beginning of it. You know what I mean? I read a great article today talking about the endowments and pensions that are seeking OTC exposure into Bitcoin. That is incredible, because most of those entities, when they're coming to the table, they're not coming to the table buying at $40,000 a Bitcoin and selling at $55,000 a Bitcoin. That isn't at all what they're doing. When they're bringing their wallets to the table, they're making allocations for 5-10 years. And in a fixed supply game where analytics companies are telling us that 78% of all the Bitcoin that has been mined is locked up in either institutional custody or cold storage wallets, which means the float or the available supply of the asset is diminishing. Well, when you look at supply and demand principles, as this demand grows and that supply shrinks, we're going to see exponential growth in the pricing of that asset. And then it is just a matter of market cap for other assets to emerge to become worthy for those institutional elements to include them into their portfolios. It's generally about $200 million is kind of about the point. So as these smaller market cap coins, your Ethereums, XRPs, your DOTs and Cardanos and, etc., as their market caps get larger, they're going to therefore be included in larger and larger pools of capital allocation towards this industry. It's really, really exciting stuff. I see Bitta is really busy with her child. Brady, I think it's time to bring you in and talk about your thoughts of the show tonight. WWJD, what would Jerry do? That is the question. It's certainly not mixing a salad. I have not been eating well. I have been living off beans and rice, which are just adding unwanted pounds. And I don't know. I'm looking forward to the day where my assets are generating enough that I can borrow enough to have money in the bank. I'm going to have, check this out. This is my goal. I'm waiting for Brady to get on, but this is kind of my end goal. This is what I want to do. I want to get to the point where I have a chef doing 2 meals a day, right? I want a personal trainer, a yoga instructor, Tai Chi instructor. So some days it's going to be resistance training. Some days it's going to be yoga. Some days it's going to be Tai Chi. I want to have my super badass greenhouses where I'm growing my microgreens and my lettuces and my various vegetables that I like. And I want to have enough very different, like we call them cabanas down here, like living quarters, so that people can come and do a week training where we're either learning about, investment, but also nutrition and physiology and health and wellness, so that we become this well-oiled, well-balanced, wealthy, happy, spiritually fit, emotionally well being. Talus 7, same here. I'm eating nothing at the moment to ensure doesn't make them later. Yeah, I mean, that's kind of my thing. Hey, Britt, wow, you're badass. Don't take that lightly. Well, no, I mean, come on. Anybody who talks to me offline knows that, the only thing larger than my ego is my waistline right now. So, but I want to welcome Talus to the show. I haven't seen you here. Good to have you, Prof XRP. Good to see you. Joshua, I think I said hello earlier. Right on. Good to have you. Brady, when you're ready to unmute, let's get you unmute. I want to get your thoughts on the show tonight. This was our first show that I ever went solo.
Yeah.
I didn't have a guest. So what do you think?
I'd say keep going. It was incredible. And I think it was incredible because, or as Nick says, pivot quickly. I think because you were able to, speak your truth through your investments, you were able to meet the people that were also doing the same with theirs. So it's no coincidence that kind of attention towards, I guess, your education on money, it's valuable. So it's good to know that people are here because they want to learn how to literally make their money work for them so they don't have to work, which is such a concept for some people to wrap their heads around, because to think it's possible is to literally undo and relearn everything you've thought about economics and finance up until now. Because as Nick says, the guys that are running our Fed's economics and everyone with all those policies, they had their policies before the pager, before the color television, before the internet, before, like, that's the math they're working with. So don't be afraid to go find the truth, and then once you have it, like you said with the opinions, what is it, carry them lightly? lose them
Well, I
quickly
mean, I
if
have
need
strong
be.
opinions, but I hold them loosely.
There you go. And I think that's what we're all desperately trying to learn how to do as quickly as possible, because we know that if we, now that we figured out what money, I guess what money can be, because it's not necessarily what it is, but we've understood that given our options, as you pointed out with fiat, gold, and crypto, two of them are looking back more than they're looking forward, while as one of them is facing so far forward, we can't see the end of it because it's like it's scalable. Now that we figured out that money doesn't have to be a physical object, and it's actually the economic success of its function, why can't our attention be money? If Bitcoin can be money, it was an idea. So I think it really expands people's concept of money. It's going to be crazy. So I guess I'm happy that I'm here for the ride.
You know,
It's been a long time coming.
Right on, brother. Right on. So it appears that Bitta will not be here to do her final thoughts. But I was really glad that she was able to come in for the time that she came in. I want to, as I do my final thoughts, folks, tell you this. One, this show was, is, and will always be about us doing this together. So we have a standing policy. We don't always talk about it, but it's always there. And that is, if you want to come in studio, come on camera, share your thoughts, have an idea, talk about an idea that was present on the show, or just give a comment, all you got to do is say, Brady, put me on the show. In the chat, give us an email address. We'll make sure we send you a link to the studio. We'll bring a boom, bada bing, bada boom. Just like that. Bam. Brady, welcome to the show. Do you have a question tonight?
Jerry, I don't have a question, but I have a message, and I'm trying to.
Go ahead. Yeah.
Since you were showing or you were expressing an idea with Bitta that was fresh cracked out of the cranium.
Okay.
I imagine I actually forgot I set that up. However, I'm not sure if I'd want to try it.
Let's try it. Let's try it right now. Folks, so who wants to call in? Does somebody want to call? Like, this is old school call-in radio style, but let's try this. Is there one of you?
No idea.
Is there one of you brave enough to pick up the phone and call 914-338-8533 and be the very first live-in caller to Market Conversations? And while we're waiting for that, I just wanted to say, hey, Joshua, obviously I'm not a regulator, but I can tell you we're every crypto except for Bitcoin has the possibility to be under regulatory scrutiny. Nothing except for Bitcoin is safe. I know we think Ethereum is. Trust me, it isn't. Bitcoin is the only one that's safe. And the reason being is there's nothing anybody can do. There's nobody to take to court anywhere in the world. Bitcoin is not a good luck. Good luck. Now, that being said, will they be able to take your Dash and Monero away? No way. But what value does Dash and Monero have if you don't have a trading partner to trade it with or a way to exchange it for a good or a service, right? Or to collateralize its value for and receive fiat to do whatever you want. So that being, there it is there. There's, folks, I'm telling you, the sheer enormity of the projects out there that are incredible, that have bright futures that I don't know about is pretty large, right? There are so many projects that I don't know about that are incredible projects that I'm completely unaware of. What I do know, and I have a very deep understanding about, is Bitcoin, Ethereum, XRP, XLM, VET, ADA, and what I'm going to dive into now is Polkadot, because I did take a position in Polkadot today. I sold
think
my Ethereum to buy some Polkadot, and you know what? I'm completely okay with that.
I think we
Got a
did
caller?
something right. I got 2, and I'm obviously this is the first time I'm attempting to do this. So I have a 303 number and a 760.
Well, start with just pick one. Don't analyze it in your brain. Just
Let's
pick one.
see.
Anyone.
Anyone?
Welcome, caller. Welcome to Conversations. How are you?
Hold on. We're gonna see who's gonna pick up.
Oh,
And they
we got
may
a
have
caller?
to. Well, we're old school, Jerry. Remember?
Yeah, but I thought they called us. We have to call them.
Hello,
Who's this?
this is Joe from Denver.
Joe from
Denver.
Denver. Good to have you, man. Thanks for calling Market Conversations.
Shout out to all the XRP hodlers.
All
Go
right.
on.
Exactly. That's what we like to hear. Dedication and passion. Because if it wasn't for that, guess what? No one would fucking be here. Get used to it.
Of course. Can't be
Maybe
easy.
Part
with,
of the language.
maybe with the language.
Exactly. I'm just, hey, we're all grown-ups. We're all looking to make an investment that pays us back in not only dividends, but compounded interest and asset appreciation. It's a mouthful, so, pull up your sleeves and don't be afraid to do some homework.
Oh, I've been deep diving for I can't even count the months anymore.
Yeah,
But I'm going to continue.
it's definitely a dedicated effort that is best done with someone's spare time, because that's the most valuable time.
Oh yeah, 100%.
Yeah.
100%. If you can't give up your free time for it, well then what are you doing?
What is it worth? Right. All right.
Oh yeah.
Well, it was great
Thanks
to
for
hear from
calling,
you.
Joe.
Number one caller. We'll have to figure identify. Put your
Put your name in the chat so we'll write you down. You are the inaugural. You're the first, baby.
Okay, cool. All right, thank you for calling.
Yep.
All right, that was number one. Jerry, this
We
is
get our very first live-in call. That is so great.
this is like skinny dipping with friends you met at a vacation holiday wedding. I don't know.
I'm with you, Lance. I'm with you.
That's it. Welcome. Let's do round 2.
Waka waka.
I think once we have all this in headphones and whatnot, it'll be easier to communicate. But hello. How may I help you?
Hello, caller. What's your name? Where are you calling from?
Who's this?
This is Bill.
Bill.
Hey,
Does
Bill.
your last name happen to be Gould?
No.
It does.
Oh, that's Bill Gould?
I had a feeling. He probably had to go find his cell phone somewhere.
So,
How are
Bill,
you?
You got a comment? What'd you think of the show tonight?
Do you want? This is actually. Let me see. Do you want to come in? I can just send you the link.
You're Brady. Is that the deal?
Well, it's hard because it overlaps. So if I send him the link, then he can get in the StreamYard, and the sound you'll hear the sound the same time I do, if that makes sense.
No.
Oh, all right. Well, then maybe we'll just have to do
You
it.
walk me through the tech stuff after the show, Brady. We don't need to bore the people
right.
with it.
I'll be
Bill,
quiet.
thanks for calling, man. I've appreciated your support. You've been an incredible member of this community. Thank you, Bill. Thank you. So, Brady, that was
Thank
cool.
you,
We're gonna work on we're gonna do a segment.
Okay.
All right.
All right,
We are gonna make a segment out of that somehow, some way when we get the tech worked out. But I think that's cool. I think that'll be a neat way if people, maybe they don't want to come on camera. Maybe it's just easier just to dial a phone number. Boom. Hey, Jerry, blah, blah, blah. You're full of poo, or hey, blah, whatever the deal is. So we're going to close it out for tonight. I want to welcome Joe. Joe, nice to see. Oh, this is Joe from Denver. Joe, XRP, baby. I'll tell you what, folks. If you're following my show, I sold out of my XRP position. That does not mean I don't love XRP. And I will tell you, I have a chunk awaiting the correct entry price for me to get back in, which I know I will. It's just a matter of, everybody needs to be confident in what they're investing in. And I was not comfortable giving back all the gains that I had made just to spend who knows how long underwater again, right? So, but I have XRP on my radar. It will be back in my portfolio very shortly, I hope. And if it takes a little longer, it takes a little longer. So that's the way it goes, right? Folks, thank you so very much for all the incredible support. I hope that there was an insight or a thought or a perspective that you can take away from this show that'll add value to you as an investor so that you continue to produce better outcomes with your investment dollars. On behalf of Brady, Beta Avenue, and myself here in Costa Rica, Pura Vida.